Welcome back to the LPR Trading Group YouTube channel. I've got another video for you here today. It's a live trade that I took. I give a serious in-depth walkthrough on this trade. I talk about everything that I saw, pausing the video, rewinding, breaking down every little detail I saw in this trade to capitalize on the market. And this is something that I shared with the chat room. This is what I talked about in the chat room on voice as this trade was playing out. I went through the trade after it played out. We talked about our plans before it played out. This is typically what we do every day in the market. Sit back and enjoy. Make sure you like, comment, subscribe. All right, so today we're going to be reviewing a trade that I took, and we took in the chat room today. Now, this trade is a little bit more difficult, but I want to talk about it. Now, what I want to talk about here is the footprints and how we identify sell pressure versus buy pressure in a given situation. This is a recording we're watching right here, and at this time, it would be right around this area in price here. So we're not looking for longs up here. We're not looking to buy breakouts of ranges like this. The way we're trading is we need defined targets that the market gives us in the present time. At least our first targets have to be defined with good risk versus reward ratios. Now, me personally, I'm not looking to get 2-to-1 out of a trade, 1-to-1, 3-to-1. I'm looking to get like 5, 6, 7, 8, 9, 10-to-1 on a trade. This is what we're looking to make on a given trade. So currently the price is trading up in this range, and I'm going to go back to the footprint chart and show you guys as it plays out what I was thinking and what I was going through, or what was going through my mind while this was playing out. We'll just start up this footprint here. So what we can see here is I'm actually looking to put on a starter, and I put on 5 MESs here as a starter. Why? This is the breakout range. So this little yellow line I drew right here is the breakout range from right here. So this is essentially, it was a high of daybreak at the time. Well, let's look at the footprints and see what happened on the high of daybreak. Now I apologize if these footprints are a little bit fuzzy. My numbers are small. I just like to get a lot of information on the screen. Maybe it's not showing up great on the recording, but like in previous videos, just be worried about the colors, the yellows, the greens, and the pinks. So once we break out of this range right here, which is the high of daybreak, we actually break out, volume comes in, but there's no serious imbalances to the long side, which means the buyers aren't exactly overwhelming the sellers, which should typically happen on a breakout because the sellers should be stopping out, which means that they would be buying back their positions, and the longs would be getting longs. Or longs would be getting long. So typically when you're looking at the high of day breaks, you're looking for these big green thrusts right here on the offer side, saying that most of the orders are marketing at the offer, pushing price through the high. This is what creates a squeeze. Now, in this case, that doesn't happen. We do get a push on volume, but the sellers are responsive, and we actually have a lot of orders hitting the bid here. This is telling me at some point during this time, sellers are trying to layer into a position here. Bigger sellers are trying to layer into a position here. Now, as time goes on and these candles push up and start closing, we can see on this candle right here, you see all this green and yellow? This is where the buyers really start putting pressure on. The problem is this is too little too late. This is exhaustion. Now, I don't know why these buys are coming in, but this is extremely exhaustive. This was the breakout. Whoever is buying up here is a retail fish providing liquidity for bigger money to get short. Okay, so we see all these buys come in at well after the breakout. We're talking 10 points after the breakout, which is likely a bad retail buy in the first place. And this is where I start seeing sell imbalances start printing. We get a 173 by 37. Now I have my numbers set up in Quant Tower to take a 3-to-1 and a 6-to-1 imbalance and print it in a different color. So as far as the numbers, I really don't care. My mind is just focused on the colors because I know the ratios. So once we get sell imbalance number 1, we push up a little bit, we tick over the high. We don't get huge buy imbalances on this side. In fact, we get another sell imbalance. We get big selling here. We get big selling here, here, here. The sellers are present. The exhaustion from the buyers here is setting the tone for this current trade. And we can see by looking at these footprints that the sellers are getting interested. So I see two sell imbalances here, and I actually should have hit the button much earlier up here, but I was talking to the chat and marking some other things out. As soon as I saw the third sell imbalance, this is where I hit the button and got short 5 contracts. Now I'm short 5 contracts, and my stop is going to be above high of day. Let's play this and let this play out a little bit here. And we'll actually fast forward a few seconds. Okay, so I'm in 10 now. Let's back it up. There we go, 5. Okay, let's see when I hit the button on 10. You see the tape here printing blue? These blueprints are buyers trying to push the highs. You see this 127 by 2? This is a huge buy imbalance. Okay, so in my mind, I'm in extremely small. I'm in maybe in 1/4 size. So if I stop out here, I'm perfectly fine. What I want to see, though, is I want to see terrible retail putting pressure on the highs, getting stuffed by big money good sellers, right? And this is exactly what's happening. We have a 2 by 27. This is telling us bad retail is trying to push the highs. Tape is printing blue, so they're hitting at or above the offer. And now we have an imbalance here, 158 by 31, right at the highs, where we got this big imbalance before that failed from. Let's play this out a little bit. Okay, so I put 10 on. Why did I put 10 on? Because this 158 by 31 is holding true. It is holding the previous imbalance level where we suspect that sellers would come in and start pushing price to the downside. At this point, longs are so far gone. Anyone buying up here is insane, okay? The problem is 95% of bad retail is buying up here. It's insanity. We do not want this. We want to wait for clues and evidence in the market in order to develop a thesis. This is our market lawyer mindset, right? And this is how we have to think about the markets when we're trading them. 90% of my trading is hands off. It's just thinking, analyzing, figuring things out, drinking a coffee, watching a YouTube video, whatever it is. 10% or less of it is actually clicking buttons and executing trades. So when the time comes to execute a trade, it's very easy because I've spent 95% or 90% of my time planning for these trades. Let's play this out a bit more because I do get in one more lot. I didn't get full on this trade, but I do get in another lot. Now, I put a hard stop up here. You can see I've got a hard stop right above the highs at 62.25 because this is the area. I know if this area fails and we break the highs, there's a lot of people getting short here, so this could squeeze 2, 3, 4 points. I don't want to be a part of that. I'll take my stop, honor my stop, and re-enter the trade if I get faked out and I have to get short again, okay? But for now, we're going to honor our stop. It comes one tick from my stop. I don't panic. This is the trade. I just let it play out. We can see buyers are still trying, but what do sellers do? Sellers continue to wash the buyers out. They won't let the buyers push above this 162. Pop forward a little bit, it drops down, we still have 10 contracts, we're getting weak. I've got I've got my stop in here, I've got a small take profit for 30% of my position here, down in the 153s. Now let me pause this. So I've got take profit in the 153s. Why the 153s? This blue line here is 30-minute initial balance high, high and low. These are big areas to play, especially in the futures market. What is 153? I'm front running the 30-minute initial balance high for a partial, okay? It's just that simple. People ask, how do you know where to take profit? How do you know what your final targets are? Yada, yada. Just look at the chart. It's simply going to tell you, right? So let this play out a bit more. We start getting more imbalances printing here. Buyers try and push through a little bit. We're waiting. We're still on 10 contracts. We get more imbalances to the sell side. 300 by 54 looks good to me. I'm looking to put on some more here in a second as soon as I know it's holding. And I get 5 more contracts on. Okay, why is it so easy to click the button in this scenario for me? Because I know what trade I want to look for. I know the entries I need to look for, and I know when I need to click the button. And then all I have to do is sit there, watch, emotionlessly click the button. Okay, This is not high octane trading. This is not your breakout and hope it runs to the moon type trading. This is strategically placing entries and exits around big money in the market. Okay, it's order flow. It doesn't lie. The 562 EMA, I mean, like, maybe it's a thing, I don't know, but to me it lags and it lies. Volume, price, and order flow, they just simply don't lie, as well as time. I mean, time passes, it can't fib us. It is what it is. So now we're in 15 contracts. I actually upped the size of my partial here because we're in bigger, and I'm looking to get 5 more on. Unfortunately, I missed my last ad. It is what it is. I'm drawing lines here on the chart, explaining to the room what I was seeing. Okay, taking screenshots, sending it out to the room. Let's fast forward a little bit here. I won't go through this whole trade because I end up holding this trade for a while, but we'll get through most of it. I'm just hitting the skip forward 30 seconds here. Pop it forward 30 seconds, just to try and get through some of this trade. Okay, so now what happened here? We actually formed a range at the highs. Now, we are trending up. At this time, we were trending up. So if we look at this chart right here, we're looking at this time. That's the range that I was looking at. So we were trending up. Fair. The problem is, like I said before, we have buy imbalances at the lows. People are going to say, well, Dave, why didn't you buy the buy imbalances for the trade to the long side? Well, number one, we've moved a lot so far. Number two, if we buy these buy imbalances, I'll be buying the 59s, targeting the 61s. Because this is the target that the market's given me on the day. It said this is the high of day. So why do I have the right to ever say, I'm going to buy the 59s and my target's going to be 70? Okay, that's a valid target. It's not a valid first target. The market told us, this is my high of day right now. This is where I have run to on the day, and this is all I want to go for now. So if you're going to take a trade at the 59s and target 61s and your stop's going to be 2 points, you're getting a 1-to-1. This is bogus. I do not trade like this. I will not trade for a 1-to-1 risk versus reward ratio. Actually, my RVR on this trade wasn't even that great. It was like 3 or 4 to 1 to my first target. We had so many pieces of the puzzle on this trade that I was super confident in this trade. And if I did get to my final target at low of day, which I did, it would be a really good trade. So this is how we played this out. Let's start this again. So once we pull out of this range to the short side, we know that sellers are winning. I can be very confident with the stop at high of day, saying if we do break high of day at this point, the trade just didn't work. And that's fine. We have to accept the fact that some trades are going to work and some trades are not going to work. This is actually where I missed my ad. Now that we've showed that sellers are taking control over this battle here at the highs, once we get a pullback into this range, we can look for similar things, right? Are sellers taking control when we get back into the range? Can we get bigger? Because I do have room to get bigger. Now again, I was blabbering and bantering with the chat, which is totally fine. We pop up into this range. Who shows up again? The sellers show up again. Where? Right where they showed up before and push price down. It's very important we recognize that once these sell imbalances get put in and sellers start pushing these imbalances lower, that's aggression to the downside, okay? They're showing aggression to the downside. Buyers are giving up. Sellers are showing up. There's actually a better ad here, and I believe it's on this candle right here. Watch what happens when we pop this high. Now, if you're just that retail trader that buys high breaks, pivot high breaks, whatever it is, this is where you get trapped, okay? Why do you get trapped? Because you're just looking at a candlestick and you're hoping. You don't know what the order flow is inside the candlestick, and you're just hoping the trade's going to work. Now, at some point on this trade, we're up $300 or so, 350 bucks. Now we're back to almost break even. Do we freak out? No. Has the trade played out? No. Has it hit our stop? No. Have we got to target? No. So we just let the trade do what it has to do. Let's skip forward 30 seconds. Here it is. What happens when we break this high? By one tick. Buyers throw an imbalance to try and push the highs. Who shows up? 221 by 33. The sellers show up and aggressively start hitting the bid. This was the ad I missed, okay? It's an ad right up against my original position, so I'm not going to be diluting my position. I can still hold the same stop. I won't move my average down here, and with first in, first out, my contracts will be here or better. So this is where we want to add. The problem is with most retail is when price starts coming back to their entry, they freak out. They go into this emotional panic mode where I was up 100, I was up 50, I was up 300, 500. I'd rather just cut the pain and call it break even. No, at max pain is where trades work, because this is how the market works. It works off emotional bad retail traders like maybe yourself and what used to be me, and it capitalizes on that emotion. How many times have you been in a trade and said, oh, I got into the trade here, it popped up, came back, stopped me out break even by 2 ticks and went? They're not running your stops. All this crap about they're stop running me, they don't care about you. They don't care about me. They don't care about any retail. We're simply not big enough. What they care about is us in bulk, right? If you're going to sit around in bulk with all the other bad retailers that are buying pivot high breaks and shorting pivot low breaks, power in numbers, right? They're going to know most of the fish are in that area. So those are the areas that they're going to go for. Not because they want to stop you out. It's because they want your liquidity. It's not a stop run. They simply want the liquidity of bad retail to fill their orders on the other side. Why do they come up here? Bad retail is going to buy. What position does big money want? They want short. For every buyer, there's a seller. There's never more buyers than sellers. So what does big money need to do? Price needs to go up into their high volume areas in order to attract bad retail buyers. So when bad retail buyers buy, the good money and the big money is selling to those bad retail buyers, filling a position. Market starts coming back down. All the bad retail starts crying. Big money got filled, and that's how it goes. That's simply the name of the market. You have to choose which side you want to be on. Let's fast forward here a little bit. We get the rejection that we want right off that area. Beautiful. Lots of sell imbalances come in. This is fantastic. We pop down. We get into our first target. I just want to go back a second here. This is our first target. 153.25. We get in there. Beautiful. Okay. And we keep moving down. So I start layering up more targets. I layer up more targets. I leave my stop in. 10 contracts left. I go some in front of, let's check this out, 48.25 and 43.25. Why, Dave? Why are those your targets? Okay. 15-minute initial balance high, 47.75. So I front run my target in front of 15-minute initial balance high, which was the opening drive that we got rejected off of. Okay, 43 and change. Why is your target there? This is an established pivot low. After we pulled back, we pushed and we broke highs. This was strong. There must have been buyers here. Where's my target? 43.25, right in that area. Dave, what's your next target? Okay, below here, where's the next most critical area? Low of day. That's where my target is. 41.31.25. And we put those orders in, we left our stop in, and we let it run to low of day and we got our target. Okay, we'll play this out a little bit more. I don't know if there's much to talk about. I'm screenshotting a few things for chat. By the way, we talk about this in chat every single day. We do two Zoom sessions a week. And to be honest with you, I do 1 or 2 Discord live sessions a week as well. So it's almost a full week of live trading, screen sharing. We do not share alerts. This is not how we trade. I'm not telling you what to trade, when to trade it, and how to trade it. We're teaching you how to do it. It's not, okay, turn on my mic and listen to Dave and the crew and they'll tell me what to do. No, I go through my whole thought process as the trade's playing out, as well as all the other admins and students in the room. We go through our processes in our mind as the trade's playing out. We make a plan and we execute based on evidence. This is the market lawyer mindset that we instill in the room. This is the only way we trade. There's nothing else. There's no secrets. There's no tricks. There's no nonsense. We simply just trade order flow in the market. It prints us for it every day. We look at it and we capitalize. I'll chalk the video up here. But again, thanks for watching. Like, comment, subscribe. I will absolutely get back to all of your comments. If you have any questions, again, shoot me a comment. I'd be glad to add you to Discord, have a chat, whatever it is. Until then, be safe, guys.